Hey, what's up? Welcome to DGen Ed and this week's episode of Crypto Corner Sat Stacker. And so in this week's video, as I do every Saturday, I am going to be talking about what I did over the past week in crypto, what I'll be doing in the week coming ahead. But I also, wanted to start with this post here from Michael Saylor that he posted on Friday, November 21st. Wanted to talk a little bit about the history behind what that image is based on, as well as how it relates to some of the things Tom Lee has been talking about, ADL, which I believe is an automated deleveraging event, which took place on October 10th, and how things could look pretty bad for crypto, i.e., winter could be here. But before I get into that, and before I get into what I'm doing, I wanted to go over a little bit of stuff over here, like this coming from the Bitcoin Fear and Greed Index. This was posted 42 minutes ago as I record this on Saturday morning, November 22nd. The Fear and Greed Index is at 11. Depends on, the source for these indices. I've heard that it's gone sub 10. I have not seen it from them, at least not posted on X. Sub 10, when we get into the single digits, when there's fear in the streets, blood in the streets, even if it's your own, that is the time to be buying, taking advantage of the dips, but also, not financial advice. You do you, thinking about your time horizon, your risk management, all of that. Time is a very important aspect of buying the dip that I think a lot of people forget about. It always takes longer than you expect for it to bounce. Got to have endurance, so good to be thinking about that. And so, yeah, I really want to be seeing this getting into the single digits. That would be, extreme fear. So that will be a good sign. Also, did want to point out here the liquidation heat map going over the past month. I just took this screen grab, or got this image about less than 10 minutes ago as I'm recording this, which is about 10:45 Eastern. And this is from CoinGlass. And what we can see, the liquidation heat map, prices come down a lot over the past month, but we do have a good amount of liquidation levels to the upside, getting up to 140,000. And so with that being said, while we are heading down, I do think that there is some potential to squeeze out the shorts that are above us, to liquidate them. And so I don't think that we're going to be leaving these levels behind forever. It might just take some time, though, as we liquidate the over-leveraged longs to the downside. As you can see, we're eventually going to be heading back up there. But it might take months, so good to be patient. I also did want to point out the quarterly returns for Bitcoin as well as Ethereum. And, it's supposed to be, what is it, Uptober, Moonvember, and Bullcember. But really what we've seen is Dumptober and Doomvember. Hopefully we get Bullcember, but we may not. With that being said, Bitcoin quarterly returns so far for Q4 down 26%, whereas Ethereum's quarterly returns down nearly 34%. Pretty massive, and you're going to see this reflected in my data, my numbers, my portfolios. Everything is down this week, but I think it's good to be keeping the chin up and have a strategy for buying when it's down, but doing so in a sustainable way. And so I am going to be revising my plan a little bit, looking forward to going over that with you guys. But I wanted to talk about this post from Michael Saylor, where he said, endure. And I imagine most of you are not familiar with this. I have actually been to Antarctica multiple times, and so I have learned about what this image is based on. It's the Endurance Expedition, and this is the Endurance. This is Ernest Shackleton, of course, looking like Michael Saylor here. And the Endurance sank. They had to winter over. And so I wanted to talk a little bit about that history, which this is coming from a reply to the Bronx Viking. he had this post that was apparently fairly viral. He was pointing out that it's been seen more than 1 million times. But yeah, I will include a link to this post that I made, and then you can check out his post that I refer to above. And so, yeah, I just wanted to read a little bit about the history, go over some images for fun so we could kind of get an idea of where we might be heading over the next, months, maybe years, maybe just weeks, who knows. And so, yeah, I just, wanted to share the history because I'm kind of a nerd about this stuff. And so I just wanted to point out that, also Sailor posting his Endure meme is in reference to Shackleton's Endurance expedition, which is one of the greatest Antarctic survival stories of all time. And so that took place years after failing to claim the South Pole, which that was the Nimrod expedition. These, by the way, are the names of the ships, the Nimrod, the Endurance. And so the Nimrod expedition was also a great story, but I'm not going to go down that rabbit hole here. Just want to be talking about the Endurance expedition, during which Shackleton, or I guess following the Nimrod expedition, Shackleton planned an expedition to cross the continent of Antarctica. And so that is the Endurance expedition. However, the ship Endurance got stuck in sea ice in the Weddell Sea with the continent in sight, but the Endurance ended up getting stuck in that ice, drifted with the ice, and ended up being crushed in the sea ice and sank in 1915. Interesting story. It was recently found at the bottom of the Weddell Sea in 2022, and the men had to winter over on the sea ice on the islands around Antarctica, surviving some of the harshest conditions on Earth with minimal resources against all odds. And so, Michael Saylor has said, winter's not coming. There's no more winter, all of that stuff. But in fact, what he posted suggests that winter is here and that it's going to be very brutal. With this post, you can find some links to learn a little bit about, the rescue of the final members of the expedition on Elephant Island. That's the guys here. And that's not included in this map. I'll go over that in a second. And also just having some fun learning about Ernest Shackleton via Grokkapedia. I've got that link there so you can learn about that. But this is actually stuff that I have compiled from books that I've read, stuff like that. Had it on my phone, so just kind of a coincidence. But yeah, this is the journey that they had. This is South Georgia Island in the Southern Ocean. You've got the Atlantic Ocean over here, and then this is South America. You have the Pacific Ocean over here. And so this is South Georgia, and at the time it was just a fishing island, a fishing port. Still is today. I don't think that there's too much inhabitants there, but I'm not necessarily sure. I have not been, but they sailed down from there into the pack ice here. And let's see, got very close to the continent, but you see this little wall here. That is, let's see, the ice shelf. They couldn't get over it. They ended up getting stuck here on January 18th. This is 1915. Drifted with the sea ice before the Endurance, the ship, was abandoned. It sank here November 21st, and I just want to remind you, this is the southern hemisphere. So while it's November, it's actually getting warmer there. It's getting into their summer, and during that summer, they had to trek across the ice here. This is this is the ocean. But it's frozen. So they trekked across the ice, had to get into some of their little boats and sail over here to Elephant Island. April 24th, they took, I believe it was a 22-foot wooden boat, 6 of them, I believe, sailed across the Southern Ocean. I don't know if you guys know about that, the Drake Passage, very rough seas there. This was the Journey and the James Caird. That was their, I believe, 22-foot boat. And then to South Georgia. And then after that, the remaining men were then rescued on Elephant Island. So they spent, at least the people who stayed on Elephant Island, spent nearly 2 years after the ship was stuck here. And so this entire voyage multiple years spending, down south in Antarctica. This is the crew of the men on the Endurance. Before they got down there, clean shaven, looking sharp, all of that. And then this is the party that stayed on Elephant Island, bearded. They were surviving, eating Weddell seals, penguins, stuff like that. Some of them were actually, chased by leopard seals. But, fortunately, none of them died, and they did not die under the leadership of Ernest Shackleton. And this, again, is their ship, the Endurance, that was crushed and sank in the sea ice. So you can learn a little bit about that more if you're interested, but I imagine most of you are not. But yeah, that is what this image is in reference to. So, while everything worked out for that party under Ernest Shackleton's leadership, or in this case, Michael Saylor's leadership, it was an excruciating time. They really had to endure, very harsh winters down south. So good to keep that in mind. But anyways, enough of that tangent. Let's talk a little bit about my thesis. So this actually goes back to Easter, as I like to call it, Easter on 4/20 of 2025. I put out this video, link in the description as well as pinned comment, talking about how I could see Ethereum hitting 8,000 by the end of this year, which at this point may not be happening. But, the reason why I was getting bullish on Ethereum back in April, which is right over here, where we have this convergence of lines, the all-time highs from the tail end of 2017 converging over here with this green trend line having broken below the yellow one. That was around 1,400. That is when I started to get more aggressive with Ethereum. Unfortunately, my average is a little bit higher than that now because I have been dollar cost averaging. But with that and all of these bearish memes and also some of the bullish ones, which were topping signals, I should have, recognized that a little bit better. But anyways, we are where we are. And I still think that Ethereum is going to be heading to 8,000, but I doubt by the end of this year, maybe 2026, but we might have to endure a little bit longer. Maybe it takes a little bit longer. But I did also put a follow-up video maybe about a month ago, just kind of revising or revisiting my thesis, being bullish on it, but then we did, of course, break down after that. But yeah, I think it's good to just take a step back, have some fun, enjoy the memes, whether they're bearish or bullish, and kind of use them as gauges for, is it a good time to buy? Is it a good time to trim or sell, whatever? And when we were getting like Chad Vitalik or, whatever you want to call that, that would have been a good time to sell or to trim. And I didn't do that. But, around Halloween, we started to get more bearish Ethereum memes. So I do think it's good to keep that in mind. Everybody's bearish now. There's a lot of fear. This could be, leading to generational opportunities. However, it might take some time before those opportunities pay out. But anyways, enough about that thesis there. I'm just going to go over to basically 20 different tokens that I hold, that I've been stacking, and, basically what I planned to do, or what I did over the past week, what I plan to do over the next week and into the future. And here, looking at this just very briefly, I have been dollar cost averaging with Bitcoin, with Ethereum. I did dip buy with Dogecoin as well as Loopring. I have been dollar cost averaging with Solana. And I did dip buy with Fartcoin at 20 cents. I didn't think it was going to get hit. It seemed to be holding up pretty strong, but the fart got let out. And, I did dip buy actually this morning. And then also down here, kind of hard to see with Ed blocking it, but Pudgy Penguins or Pengu, I have been dollar cost averaging and then also have been dip buying. So I'll go over all of that and then, some other levels with these other tokens. To the downside, to the upside, stuff like that. And I do also want to point out the storage that I'm using for My coins is Trezor hardware wallets. They do have a Black Friday sale going on. I think you can get 40% off some of their wallets. And I don't know actually if there's a link in the description of the video, but it's just trezor.io. You can check out some of the sales they have there. For most of my tokens, I use the Model 1, which is an older model. But then for some of the other ones like Solana, Cardano, and XRP, I have the Safe 3. So those are the two ones that I have. I haven't used other brands of wallets, but I would encourage storing to endure using a hardware wallet. They don't pay me to say that or anything. I just think it's good to not be storing on exchanges. And I guess I should also mention the exchanges that I am using. I use Strike to stack Bitcoin, Robinhood for some of the other ones, and then the other ones that are a little bit hard to get to, I do end up using Coinbase. But I'll go down that list as we get through it. And I also should be noting that every single position that I have is in the red. Ethereum's been holding up pretty strong, but it looks like based on yesterday's close, I am actually in the red, down about 2%. And so I'm going to actually be revising my strategy a little bit this week to be trimming when I'm in the green, but continuing to buy when I'm in the red. I should have been trimming when I was in the green before, but I didn't do that. I guess I got a little bit greedy. But, the thesis is for the year of 2025. Crypto Corner Sat Stacker, if I'm not stacking, then, I'm not sticking to the thesis. So the thesis for the rest of this year is to continue to stack Bitcoin. Others, might be not applicable. I might stop to continue the stacking or at least slow it down. But anyways, let's get into some of the stuff here. It's about a 16-minute intro. Hopefully it wasn't too long and painful. But yeah, let's talk about Bitcoin. So I have been doing the daily dollar cost averaging, daily DCA of $10, which used to be $40 just like Ethereum, but then I've been trying to take advantage of buying the dips. And I actually would have been better off, I think, if I would have just kept, the daily dollar cost averaging of $40, because either way, this is about $270 over the course of 1 week. 7 daily dollar cost averages of $10 plus $200 in dip buys. Whereas with Ethereum, I've been doing $40 daily, and that ends up being $280 a week. With the dip buys on Strike, there's, I believe, a 1% fee, whereas there's no fee for the daily DCAs. So I probably should have done that. I would have been buying more aggressively in the 80s. But, it is what it is, and my goal is to kind of phase out of the really aggressive dip buying into the new year. And so, that's what I've been doing, but still trying to take advantage of the dips. But yeah, let's talk about the levels that were hit. And so we're going to do that by just going over to this weekly tab here. And so for Bitcoin, I had that, I thought support might be at 95,000. And I guess I didn't change this to green over here, the 93,000. That was also hit, as you guys know. So those were the two levels that I did dip buy at, 95 and 93, $100 dip buys. But then I have been doing $10 daily DCAs. I wanted to yesterday buy, at around 80,000. But I try to limit my buys based on what I go over in these videos on a weekly basis, because I don't want to be chasing a falling knife. I've definitely seen Bitcoin fall off a cliff where I think I'm buying at the bottom and then it just keeps going and then I have no more cash. But I've got cash to dip buy in the coming week. So let's think about that. Where do I want to be buying, and how do I want to adjust some of the levels over here? So if we do come back over, we can look at the list of different coins here. I might actually remove my drawings for a minute. Might actually delete some of them because it's getting a little bit cluttered. And what we can see here for Bitcoin, I've just got the 50-day simple moving average. Oh man, I forgot to, let's see. I might actually pause this for a second so I can pull it up. Sorry about that little blip. I just wanted to pull up this little bit of hopium that I saw on X. Wanted to make sure I give credit to Cantonese Cat. It does have a YouTube channel as well as this X account. I'll include a link to this post in the description. But this gave me some hopium, do or die Bitcoin, and he was just drawing a little bit of a comparison between NVIDIA and Bitcoin, with NVIDIA testing the 100-day let's see, was that 100 day? No, it looks like 100 week moving average. And Bitcoin here, coming around that 100 week moving average. A lot of people talked about having broken down below the 50 week, then it's going to go straight to the 200 week. But that doesn't necessarily have to happen. So I did want to point that out because I now have a TradingView paid subscription account. And they do have a Black Friday sale going on, by the way. But with that being said, I got this 50-day simple moving average there. I'm also going to add the weekly moving averages here, where we have in light blue, that is going to be the 50-week. Then we have the 100-week in blue. And then down there in pink, that is going to be the 200-week moving average. So these are all weeks. The yellow is 50-day. And so clearly we've broken below the 50-week moving average. And so the thought is that we would come down and test the 200-day, which is right around $50,000. Pretty massive, pretty bad looking. But as Cantonese Cat points out, there is that 100-week moving average. If I keep saying day, I mean week. And so, 100-week moving average right there, 200-week down here at 55,000. And the, 100-week moving average is right around 83,000. And if we do zoom in on the chart, what we can see that actually looks really good. It looks like a capitulation event with this increasing volume and that big wick to the downside, hitting a low on Friday, November 21st. Of $80,524.65, nearly getting to 80,000. So anybody with orders at 80,000 and possibly, and people at like 80,500, they weren't even hit. Those orders were not filled. So that's just kind of like teasing people, wanting it to go down to the 80s. So I think that there could be a bottom there, could be finding support. And, Scott Milker, a lot of people talking about how whenever it breaks down, historically, whenever Bitcoin is broken down below the 50-week moving average, it tests the 200-day moving average. However, that was always, from my understanding, based on a bounce retest of the 50-week moving average, which would be getting down back up to around 100,000. Once it bounces, would have to then get rejected. And then we would see it come down to that 200-week moving average, which is around $55,000. That doesn't have to happen. And if everybody thinks that is going to happen, I feel like it's probably not going to happen. And the Cantonese Cat might be onto something with this 100-week moving average, that actually ending up as support, with people saying, oh, it's going to get into it's in the 80s now, it's going to go to 74, it's going to go to the 60s, 67, all of that, and we're just going to see a bloodbath down here. But that may actually not happen. Just like we expected October to be up, that did not happen. Just like we expected Moonvember to be up, so far, that has not happened. Last year, I remember the Santa Claus rally. That did not happen. And so just because everybody thinks something's going to happen does not mean it is going to happen. And we might end up being very surprised with a big rally. So with all of this, it's good to, endure and to not panic, not to freak out. And so with that being said, let's think about some of the levels for Bitcoin. That we might be finding some support at. And also, I do want to mention this, that the RSI, this is on the daily, oversold territory. That is at 2253 on the daily. We will look at it, on the weekly in a second, but just wanted to point that out. But yeah, so let's think about levels of support. So that, let's see, 100-week moving average is at like $83,000. And so that's a little bit below us. So, yeah, let's see. What was that low? 81,000. So, we could still wick below 83. But, that could be support. So, let's come back over to here. And so, I think that the next level of support for Bitcoin is probably going to be 83,000. Let's just do around $83,000 number. I'm actually not going to place an order there. unless maybe I get an order filled around there, but I'm going to make that red. I'm not going to place an order there because there are some other levels that I think, I'd be happy to buy at. And so, like I have this one at 93, I really just want to be getting, in the sub 90,000 for one dip buy. And, so I'm going to mark right here, 90,000, really sub 90,000. But with current price being around 84, I'm just going to do 85, basically market order, whatever it is. I'm going to be happy about that for a dip buy. So that is an order that I need to place. Just, market order, $85,000. And then if we think about where could there be some support to the downside, let's see. On Friday, November 21st, I was not buying the dip aggressively other than my $10 daily DCAs. And the reason for that is because of these weekly Crypto Corner Sat Stackers. I want to be pacing myself, all of that. And so, since I didn't buy the dip, if we do revisit, I'd like to buy the dip. And so while 80,000 wasn't found as support, or wasn't tested, 81,000 would have been filled. So let's do, 81,000. So I think that's another level that I'd like to buy the dip at. And yeah, and then that would be like hoping that we do find that as support and we do go up. If we don't and we continue to cascade down, that would just mean that I have more time to buy the dip. I'm thinking, maybe I want to place an order at 79,000, stuff like that. But no, I'm going to have the $10 daily DCAs, so I will be able to take advantage of those dips, and then I'll have to revisit this next week. So I'm going to have two $100 dip buys, one basically a market order while it's below 90,000, and another one at 81,000. If it gets filled, great. If not, that means we're going up, and I'm happy about that. So no complaints there. And so with that being said, I'm going to come over here to make this, let's see, orange, because I need to, I guess, adjust the alerts as well as I do need to place the orders there. And with that being said, since, we've got the 100 over here, 103. Why did I pick 103? That's probably going to be corresponding with the 50-day simple moving average in yellow there. And that is at, it looks like 107, or let's see, it's right here. That is the 50-week moving average. That's around 103. So that's why I've got 103 there. But really, now that we're very clearly below 100, actually, no, I'm going to leave it. I'm going to leave this here, 103. That seems to be, we could wick above 100, but then get it rejected and then come back down. So maybe we could be testing 103, need to be reclaiming that level. And actually, that is the level that I want to see us reclaiming. So I'll come back to the chart in a second. I am just going to adjust these. They're white because I got the $10 order placed, but I do need to place the $200, the two $100 dip buys. So I'm going to make that yellow to remind myself to place that. But I did just briefly want to come back to the chart to look at, let's see, let's just hide that 50-day simple moving average to look over at the weekly. And so what we can see, this is kind of why my thesis is going to be getting adjusted a little bit. I might be a little less aggressive with my buys starting next Saturday. And that's because we have closed 1 week below the 50-week simple moving average here, again at around 102, 103, somewhere around there, and closed last week below it. This week, we are below it now at around 84,000, but we haven't closed the week. Maybe we could get a massive rally into close on Sunday and close above 102, 103, and that would be signaling that this was a dip buying opportunity and that we are going to be seeing, new highs potentially. But if we don't close above that on Sunday, then next week I need to, swallow that pill, and I need to accept that this could be heading down to, the 70s, the 60s, maybe even the $50,000 range. So yeah, I will then revise that next week if we don't close. If we get multiple closes below. But also, I do think that another thing to be paying attention to is the low from the previous week that was at 93,000. And so if we get a rally into close on Sunday and close above 93, that would be an non-confirming. Like right now, the low over here around 193, if we close below that, we've confirmed the breakdown here. But if we close above 93,000 on Sunday, then that would not be confirming this breakdown, and the possibility of us getting back above the 50-week simple moving average is on the table. So there is a possibility of that in the near term rather than the long term. So just want to point that out. So those are going to be some levels to be paying attention to. And maybe actually I should have 93,000 as that level. So let's just actually bring up the drawings. I'm going to have to delete some of them just to clean this up a little bit. And let's see. Yeah, so, okay, right here. Got some levels. Yeah, let's adjust this some. And maybe I want to actually remove those moving averages so we can see this a little bit cleaner. Okay, so we got the high over here, clearly broke below that. That was at like 118. I'm going to delete that, clean up the chart. Over here, I do think that this level will be important. That's around 107, 108. That was, kind of the level we bounced at, broke below. And so let's just look at the levels over here. 108. Yeah, I mean, I think that I should probably put 108 on that list. I think that's a level for us to be paying attention to. So 108K right there. And then, we'll think about the other ones later on. Over here, the purple line, that's 102. Kind of corresponds with like the moving averages and stuff. So I'm not going to worry about that. We do have the 103 right here. But then, looking at, let's see, the lows over here, 100. Yeah, 100. Okay, that makes sense. Psychological level, the lows over here, tested that as support, broke below it over here. Psychological level, it's going to be important. And then 98 right here. And then, so what are some of the, let's see, I make this, adjust the y-axis so it doesn't auto fit there. And so what we can see is this 50-week moving average. That is at 102 or 103. And then we also have, I thought, the close over here from last week. So that's one that I'm going to want to note. So let's see, 98. I'm not going to worry about that one. I'm going to delete that. Got the 100 right there, the green line. And so coming back over here, I think I need to move this 103 over here. I think it's going to be one to pay attention to, but I don't think that we need to be paying attention to it right now. I don't even think we need to be paying attention to, 100,000 right now. What I think we need to be paying attention to, and actually can delete that 85K. No, because I need to leave that because those are the orders that I'm going to place. 84, maybe I'll adjust that to 84. I think that's a little bit more. Yeah, and so I'll just do this so we can see all those numbers. Okay, all right there. But since I have 103 over here, we need to adjust this 103. And so that, I think for this next week, that level is going to be, let's get a horizontal ray here. And let's draw that based on the close from last week, which was at 94. Let's actually just pull this up so I can get the weekly close number there. That was at, let's see, 94, 183.97. Oh, actually, no, and it's not even the close. It's the low, I believe, is where we want to be closing above to kind of negate that confirmation of breaking down. So that low is actually, I'm sorry about this, $92,943.83. So that's going to be around 93,000. I'm going to lock that into place. And let's see, I guess, I don't do this too often, but maybe confirming close. So we want to, close above that. And if we don't, then that's a confirming close of this breakdown. And then this 50-week moving average up here would then more likely be resistance. And then we would more likely be heading down to around the 200-week moving average. And also, I did want to point out, I'm glad I remembered this, on the weekly, looking at the RSI over here, what we can see is RSI is currently at 34.7. And the last time we saw it that low was in December of 2022. And look at that. That was, when we were bottoming over here when Bitcoin, well, that was, let's see, where's the RSI currently 34.7 over here, 33.6 or 36. So when we started to break out here, price was at, let's do the open for that week when the green candle starts going up there. The open was at around 17,000. And so, yeah, we're at a 17,000 dip buying, opportunity level, bigger picture, longer term, comparing back to, what we saw over here. However, we do also need to consider that it spent, let's see, about half a year, down here. So this could be a half a year dip buying opportunity. And also, I know that there's been some comparisons to what we just recently saw to this kind of crash that we saw in 2021 before hitting like 69,000 by the end of the year, rallying, back most of what was lost there. And also note, that 50-week moving average acted as support there. So that's pretty cool to see. But then once we did break below it, bounced from right around that 100-week simple moving average, got then rejected by the 50-week. Then that broke down, retested the 200-week. So good to be thinking about that. And when we did break below and last test on the downside, the 100-week simple moving average, from the lows over here, how long did it take us to get back up? That was, from about January of 2022 to October of 2023. So about a year of dip buying opportunity. So good to be able to endure, the possibility of being down for a year. So good to be getting the average down, but to be able to do it sustainably over the course of the next year. So yeah, I'm a little bit concerned about this, but at the same time, I think that this is a way for Wall Street, big players, whatever, to shake out retail, to shake out those who are tied to the 4-year cycle, shake them out, and, then they can buy the dip. So I think, big money's buying the dip. So I think that's kind of what we should be doing. But anyways, enough about Bitcoin. Let's come over here to talk about some of the other ones. So Ethereum, what's my strategy with that? I have been doing $40 daily DCAs. I need to adjust that because what I'm going to be doing, since I am, right around break even, and I can use this to manage risk, get average down rather than increase average. If I was buying at 1,400, why is my average double that? It's because I was accumulating, which I'm happy about because I think it's going to go to 8 or 10,000 and beyond. And so I'm happy about that. But I think I want to just be, being able to manage risks so I can, have the cash to pay the bills and, whatnot, all of that without stressing out about what's going on in the crypto world. So what I think I want to be doing is ideally continue to do $40 daily DCAs, but then maybe trim out $20 per day whenever it bounces back above my average. So let's look at the chart and let's keep that in mind. Let's look at the chart and also look at the levels over here. So for Ethereum, 3,000 as well as 2,800 both hit. Let's look over at the chart and let's do this on the daily, and let's not have all of these up here. Let's just have the 50-day moving average. So Ethereum right here. This is, kind of like the revised thesis that I had, log or linear here. And, we've clearly broken down from that. So that did not play out as I had hoped. But, this is, an opportunity. I'm not losing my faith, my conviction in, where I think this is going to be going in the future. But yeah, so just considering that, and then coming over to this other chart where I got all these lines, there's this channel here, we broke down from it. Maybe we bounce, maybe we don't. But let's see, what was the low from yesterday on the 21st? That was 26.20 exactly. So, and that also, let's see, it does correspond with the moving average here. And I might, let's just see, extend this into the future and remove some of those levels. So let's get rid of the 236 and the 382, and also I need to do this as the 786, but make that orange, and then this as the 1. Need to adjust this. Sorry, I had the 6.5 there because that encapsulates the golden pocket, but I don't really think that's super necessary. So yeah, I'm just going to do this, 3, and then here I can make this the, let's see, 4, 2, 3, 6, and I don't think I need to go beyond that for any of these. But yeah, so got that, and I've reduced the levels to just include the 50%. That's around 2,600. That's what we tested. And to kind of show that, let's look at the coordinates here, and let's just extend this to 320. I think that puts it into the future. And so we can look at that here. And I should note this is on the log scale. If I switch this over to the linear, we are testing, the 618, but that is around 2,750. But I'm going to look at this. Actually, that is interesting how that does kind of correspond with the tops over here. But if we look at this on the log scale, also corresponds with the tops over here, getting into the meat of that consolidation. So yeah, I think that 2,600 seems like a compelling level for ETH to find a bottom. So let's come over here, make this 2,600. And so what I might want to do is do, kind of adjusting, moving, the range to trim, to dip by, all of that. Let's consider that. Where might this then bounce to? What was the high from yesterday? The high was 2882. And the high before that was, the day before that was about 3,000. So I think, let's think about this range that we could be in. 3,000, just being like kind of psychological and stuff. And so what am I doing here? What am I thinking about? I think I need to make these orange because I'm going to consider, may place additional orders, and I'm going to put additional in quotes there because I'm just going to evaluate this every day. If it's below my average of 28.25 or right around 28, let's say, if it's sub 28, then I'll buy $40 worth. If it's above 28, or I should say, if it's above like 29, so maybe I want to put a 29 over here. then I need to get all of that highlighted there. Then I would consider kind of trimming in that range. And I guess with that being said, 28, I need to put 28K on there. Okay, so I think that support, it could come down to 26. So I think the range is going to be 26 to 30, or 2,600 to 3,000. 3,000. But really, I mean, if it's below 2,800, I buy $40 worth. If it's above 29, then and actually, so maybe I need to make those white. So like those are the levels that I'm considering, that range. And then I'd trim 20 per day. So with that being said, let's just pull up the calculator. And so 20 per day times 7 days in the week, I would be trimming out about $140 maximum. If it's below 2,800, then I'd be adding at a maximum double this, $40 per day or $280. So what I'm going to do, sorry about flipping back and forth there, rather than doing $40 daily DCAs, I'm going to put this as approximate, or let's say, yeah, approximately $40 daily DCAs, or should I say approximately 20? So I'm kind of revising this a little bit, approximately 20, and that would be, on dips, I would buy 40. Oh, let's see, how do I want to denote this? On dips, I would buy 40. And on bumps, I would sell 20. So do I like how that's denoted? I've kind of got a, and I should probably put that in parentheses, that whole thing. Excuse me. And I won't do the tilde, so it's not making it all wonky. And let's see, I could delete that space. So there, that should be lined up, and actually I can put that back in there. Yeah, so that's okay. And so that's what I need to place. And that's something I'm going to need to be checking every single day. Is it, no. Yeah, it's going to be approximate. And yeah, but I can just leave it like that. That's fine. So yeah, that's kind of my strategy to trim out $20 on a daily basis, and that's going to accumulate. So if it goes down to like 2,600, I'm going to be buying the dip there. And then if 5 days from now it gets up to 2.9K or around 3,000, then I would do 5 times 20 trim out, so I have some more cash to buy the dip. So yeah, I mean, but those are the ranges that I see, and alerts and orders, I'm going to need to place those. So good to, have that in mind. And now, I'm rambling on for about 48 minutes, just really talking about my thought process. So I need to be moving along a little bit faster. But I did want to talk about Dogecoin. I did get a dip buy fill, $100, and that was at 15 cents. And part of the reason why I placed that order, I actually had a $200 dip buy order at 15, but then I dollar cost averaged over the prior couple weeks because I wanted to have more exposure to Doge than RLC. Speculative, shouldn't be so high on this list, but it is what it is. Doge, higher up. I want to keep it higher up. But if I trim out $100 worth of my position, Doge would still be above RLC. So that's kind of a way to manage risk, have some cash on the side. And so what are levels that I could see doing that at? And that's really going to be based on, my average over here. So for Dogecoin, right around 18 cents. So let's look over at the Doge chart. Closed yesterday. like 14 cents with a low of 13.3 cents, and currently trading below, 14.32, where I've got that line marked. And so where could I see this bouncing? We do have the moving average here, and that is around 18.89 cents. So I think like 19 cents, right around there, maybe 20 cents, could be a region to be acting as resistance. And so with that being said, and that being above my average, I think that I need to make, 19 cents a level that I would trim at. Oh, and I need to make these yellow actually because I don't have those orders placed. And same with Bitcoin, I don't have those orders placed, so I need to make them yellow. But yeah, 19 cents I would trim out there. And so with that being said, I need to place the order to trim out $100 worth at 19 cents. And so where is support that I could see? The next level that I have is 10 cents. I mean, maybe it holds around 13 cents, but maybe it breaks down a little bit more. I mean, so there's some hope that where it's at now is going to hold, but it's already at support. We're not looking for that as like a dip buy level. And that would really be like 10 cents. So I'm just going to adjust this over here to 10 cents. I don't plan on dip buying that unless this gets filled, then I'd have $100 to be able to buy that dip. And so then I would consider it. So I also need to adjust the alerts there, and I can remove that 10 cent level from over there. Although, maybe what I want to do is include 13 cents. Just make that red, considering that could be acting as some support. So I think that's, those are some helpful levels there that I view. Yeah, but I mean, as far as looking at this, we're testing the bottom of this trend line, which is actually kind of surprising. Like maybe I drew that on the linear. Yeah, and on a linear scale, it looks like we broke down from that. On the log scale, it looks like, there's some hopium of that being held as support. But actually, if we do bring this over here, how does that look? How does that look? That kind of screwed it up over here. So yeah, I think I gotta leave that. But maybe I could extend this. It's all just gonna be wonky. Yeah. So I'm not gonna worry about that channel. That's based on the linear. If it looks odd, gotta switch. But, maybe there's some hope that we are finding some support around 14, 13. If not, what was the low over here on October 10th? That was 9.64 cents. So yeah, I mean, I think 10 cents could be getting hit. So I think it's good to have a plan to brace for that, to endure. RLC, that is one that I did not get a dip buy fill at. So let's just take a quick look what that level is at, 56 cents. So if we do look at RLC, this one's been holding up better than the others. Maybe just because I was like, I'm not buying anymore. It's way too risky, too high up on my list here. It's currently trading around 70.5, 70.6 cents. Why do I have 56 cents? And so that is, you can already see it there. That's based on the lows over here, right around 56 cents. The low that was hit on that day, June 18th, was 56 cents, June 18th of 2022. So maybe there's some support there. And also, just out of curiosity, let's look at these moving averages. Okay, so we're well below all of those 50-week moving averages. Same with the daily ones up there. So, and actually I've got them all drawn there. Okay, so just need the day there. Yep, so I'm just going to wait for that order to get filled. And if it doesn't get filled, that's totally fine. I've got enough risk exposure to RLC. And so let's see. LRC, my order was filled, $100. And that was at 5.2 cents, whereas LRC trading at right now, it did bounce from that level. So that's good. We're above it. So I am actually just going to, revise this to be like this. Oops. What's going on here? Oh, I don't know. I was doing this button. I was doing the wrong button. There we go. And I don't plan on placing any orders there. Just going to make it red. I'm not going to adjust the levels. I'm not going to worry about it because I don't want to be spending too much time. But then the next one, Solana, that's one. And actually, Dogecoin, I forgot to mention this about Doge. I'm not going to be doing any dip buys. And Coinbase, too many fees, whatnot, not as easy to use as Robinhood. So I say Robinhood right there. And not applicable. I don't have any orders placed, so I don't need to adjust that. LRC, going to adjust this to not applicable, not placing any orders there. And let's now look at Solana. I've been doing the daily 1428, which adds up to about $100 a week. I'm going to continue to do that for Solana. I'm down 28% in that position, but I'd like Solana to actually overtake Doge in this list. So I need to just be continuing to add. That's also why I don't want to be, buying the dip in Doge unless I do trim out a little bit, just keep that above RLC. But yeah, Solana, let's look at the levels. So 130 was hit, and we are now trading below that at 127.70. But what was the low on Friday the 21st? The low is 121.47. And if we are looking at this log scale, whatever, 130, that's the 786 there on the linear scale. Looking at this on the log scale, that actually comes down to around 117. But maybe 117 is not exactly tested. And so maybe, I want to adjust that to 120 if we don't get to 117. So I'm going to adjust this to 120. I'm not going to be buying the dip because I'm already buying on a daily basis. Oh, did I adjust these? I don't think I adjusted those, so don't have to worry about that. Solana. Do I have to adjust? Yeah, I need to adjust the alerts. I don't need to do anything with the orders though, because I'm just going to continue to dollar cost average every single day. And I'm not going to worry about, upside levels or whatever. 216, why do I have that? That is going to be corresponding with, I don't know, the over here, right around there, where the cursor is. I'm not going to worry about, just going to continue to DCA. Moving down the list, I guess Fartcoin, I'll have to talk about that. But I should just mention Ondo because that level was hit, 55 cents. Now trading at 46 cents. I'm not chasing it. Could be a falling knife. This is on the log scale. Over here, this high, 32. Let's see. I'm just not really gonna. I guess one thing that I could do. This is just gonna be very, very wonky. Just taking a straight line down here to the kind of neckline there. Where could that be going? Too far down. But yeah, I think that if this is at 46 cents, I would say 30 based on the high over here. 33, but maybe we don't actually get there, so maybe it actually bottoms around 40 cents. So I'm going to make this level 40 cents. And I'm not going to place an order or anything, but I will need to adjust the alerts. All right, now Fartcoin. 20 cents was hit this morning. I was really impressed with how it was holding up. And, Ethereum Classic. Fartcoin overtook it, so right here. Yeah, Fartcoin came down. It's currently at like 18.50. And we did have the low over here of about 3 cents for Fartcoin. That was from October 10th. But I don't know that it'd actually get to 3 cents, so I'm going to adjust this to the level that I have over here. Having fun with it. Got to have fun. And that is going to be 069. And so I've got that there. That is a level that I will place in order. It's just too far away for me to be able to place it. And so I am just going to consider that. Yeah. And I guess that would mean over here I need to change the $100 that I did dip by to yellow, because I would then need to place it. But I can't place it just yet because it's too far away as far as I understand. Oh, and what happened over here? Okay, so I need to do this. Why did that go? There we go, 420. Okay, and then over here, need to make that yellow. Okay, cool. That's fine. And I'm not worried about it. Got the, all the stuff I need placed there. Ethereum Classic doesn't look like it came down to 12 bucks. Currently trading around 1350, but did test right around 1269, hitting a low yesterday on the 21st of 1255. So I'm going to leave that 12 there. Maybe that's acting as support. Maybe it's a good level. Just didn't get filled, didn't get penetrated. The next one on the list is Cardano. That level was hit, which was 42. Just having fun with, 420. And the low on the 21st was 38.68. Where could I see this coming down to? 36 or so. I could see it coming down to 36. I'm just going to do a very casual line over here, so you guys can see kind of why I could see 36. Consolidation over here. And maybe, moving averages are all above us. So 36 cents, I'm going to say that as the new level for Cardano. I'm going to make that red because I'm not placing any orders, but I am going to need to adjust my alerts. And 36 cents, I guess I should make it orange because maybe I would consider buying the dip. But as of right now, I am not. Okay, and then the next one is going to be Avalanche. Actually, maybe I want to do this so you guys can see what I'm looking at a little bit better. Probably a little bit better way for me to have that. But yeah, Avalanche right there is trading around 13.25. Pierced 12, but bounced. And so the low on November 21st, Avalanche, it did not pierce 12. That's why it's still orange. The low is 12.51, so I'm going to leave that. I don't need to worry about it. I'm not sure why I did that. 12 wasn't hit. I thought 12 was hit. I must have just removed something, but I don't plan on placing an order. I think I would consider it, maybe. Just have it up there. But yeah, the alerts, I think I need to revisit that. I might have screwed something up, so I want to make sure I got the alerts going off there. The next one on the list is going to be Chainlink. And so let's look over here. The level was 12 for Chainlink. Currently above it at 1207. The low on the 21st was 1159.6. So maybe that holds as support, but maybe we come down to over here, right around 10. So let's just put a level right around 10. And let's adjust that to be exactly 10. And that, just to note, it's a little bit lower than the lows over there. That's interesting to note. So with Link, I'm going to make it 10 because that was hit. And, I consider there, and let's see. Alerts. Yeah, I need to adjust. Oh, yes, I need to do it like this. Because I don't plan on buying, but I consider it. Okay, and then next on the list is going to be XRP. Definitely came through the level because we went sub $2. I had 206 marked here. I guess 190 was also hit, which was, the low was 181.71, hit on the 21st. And I did have that over here, so that was not pierced, 181.71. So then I can move 181 over here, or 180, sorry. And then I will make that, orange. And then I'll do this just to consider it. And then I can delete all of those levels there. Keep that a little simpler. Litecoin is the next one. The low from the 21st was 80. Did not get to 79, so I can leave that alone. Still on the table. And, yeah, I need to kind of start thinking about removing these asterisks or asterisks, whatever, asterisks. It's kind of a funny word. I'm pretty sure it's asterisk, like risk. But anyways, Aave, let's check that one out. The level that I had was 170, clearly trading below that around 159. What was the low? That was 147.39. I've got this level marked here at 148. 150 was hit, but not 148. We did penetrate 148, but 130 was not hit. So let's change this to 130. I'd consider it, but probably wouldn't buy. And with that being said, maybe 148 would act as support. It is below us, so maybe I should, in all fairness, include 148. I just need to make that red because I don't plan on buying that level, but maybe, I'd consider 130. All right, the next one on the list is going to be Pepe. Did go below 5 zeros and a 4 with a low on the 21st of 50396. So the 420 that I was having fun with there did not get did get filled, did get hit. I did not place an order, so nothing got filled. But yeah, let's just consider that. Let's hope that 5 zeros and a 4 holds as support. And so let's just do it like that. Not planning on doing anything there. I think I'm going to need to adjust my alerts though. Not planning on buying. And, for the most part, these I'm probably not planning on buying, but the silly memes, definitely not. And with silly memes, let's go on to the next one, which is going to be Trump coin, which is perhaps controversial. I'm not sure. But the low that I had there, the support level, potential support, 560. What was the low that we hit on the 21st? 570. So, hey, I think 560 could still be acting as support, so I'm going to leave it alone. Not going to worry about it. But if it does go lower, like to the lows that were hit on October 10th, lows of 457, that's 469, the other level that I have right here, so something to consider. And then Arbitrum, this is one that I'm actually going to start adding to because I will basically have my position size that I want for Pengu as far as my risk exposure goes. And then I would want to just be adding to Arbitrum. And so it's just going to be $1 a day, so nothing too crazy. But let's consider the levels that I had here. So 20 cents, that was hit. What was the low from yesterday, the 21st? 18.56, currently right at like 20 cents. I do have 11 cents as a potential level Oh, I guess I'll move this above Ed. Sorry about that. 11 cents. And let's see, what was the low from the 10th? 1068. So that's why I have that over here. But 20 cents. I'm not going to consider buying the dip there at 20 cents. But what I'm going to do is I'm going to place some orders. I don't need to adjust alerts, but I do need to place some orders, and that's just going to be a daily dollar cost average. Nothing exciting, but I want to get Arbitrum to be, let's see, higher up on the list than Pepe and Trump. Or sorry, I want to get Pengu above Pepe and Trump. I want to get Arbitrum above the memes, basically. And so with that, I'm just going to be doing a $1 DCA, and I'm going to round that down because with Robinhood, it's like you place a $1 buy order, a daily DCA, you get a fill at 99 cents or 98 cents, something like that. So that's why there, but I do need to make that yellow. I do need to place that order. And yeah, so I'm looking forward to that, starting to build up the Arbitrum position. And then with that being said, with, let's see, Pengu, I'm actually going to adjust this to, a dollar daily DCA, but then to get up to the risk exposure that I want, I'd only need a $3 dip buy. And why did that? Oh, it's because I need a space there. It's kind of weird how it does that. But yeah, so $3 buy for, let's see, I need to make this white. And then make the $3 because I don't have that order placed yet. Need to make that yellow. So that is placed. And, but then let's just look at the Pengu chart really quick to see, this is on the log scale, coming down to that 618. And, yeah, the 618. I'm actually just going to see how, okay, so that's good. That's how it is. So I don't really want to adjust those. Sorry, I'm just going on this little bit of a tangent, but I'll include those since that's kind of like my default how I'd draw them. But maybe I actually want to make this red. Yeah, I think that's good. That's a pretty rainbow. Actually, no, maybe I don't. Maybe I want to leave it like that. So there can be the consideration of something like a full retracement there. So I'm not actually sure. Sorry, I'm doing this while recording, but anyways, just trying to get more comfortable with TradingView and stuff like that. But yeah, the 618, that's around 1 cent. 1 cent. That's the log scale. Fully, retrace below that 786. But yeah, that's kind of why I want to adjust that to be orange because, could be doing a full retracement down to 0.3, 0.4 cents. But yeah, looking at this on the log scale, 618 around 1 cent could be acting as support. So coming over here, I'm going to adjust this to that. And I'm not, actually that would be the level that I would dip buy at, 1 cent. I can delete that from over here. I will need to place that order. And I do need to adjust the alerts for that one. Arbitrum, I don't need to adjust, but over here need to adjust that. Okay, and then the last one on the list, this has unfortunately gone over an hour. I'm sorry about that. But the last one on the list is Uniswap. This is kind of like a moonbag one that I have. I'm not adding to it. That's why it's at the bottom of the list, even though I probably have more conviction in it because it has utility, whereas, Trump, Pepe don't really, especially not Pepe. I think Trump does to some extent because it's like access to him or something. I don't know. Yeah, and people are fans, So yeah, Uniswap. Anyways, Uniswap 516, that was not tested. 516 based on the green line here. So I'm going to leave that alone. Maybe 562, 563. The 786 there could be acting as support. But I'm just going to leave 516 alone. And the low from Friday was 592.2. And so, yeah, just going to leave that alone. Not going to worry about it. So this is kind of my plan for the week. It's going to be kind of a pain with Ethereum to be like monitoring that, but you know, I need to be managing the risk. Oh, and Doge. I can't believe I forgot to mention this. Did I mention something about Doge? 19 cents. Yeah. So I might actually be doing a let's see, $100 negative $100 trim. And so that is one that I need to place. So I've got that up there. And then let's just look real quick. It's going to be depressing, but let's look over at my charts. I got them lined up right there. Look at that. I eyed it without having the camera here, but look at that. They're perfectly lined up right there. Every single one of my positions now, though, is negative. We can see Ethereum. I'm negative 2%. Everything else is below that. Why didn't I sell or at least trim back here August 23rd? And that actually brings up an interesting point. I do save all of those memes. So let's, Justin, Eric Trump says it's a great time to buy Bitcoin. So, you know, just keep that in mind. But some of the bookmarks, some of them might be trashy. I guess I don't have my bookmarks. There we go. All right, so I just want to scroll real quick to when I made some memes here. It's October, not looking so good anymore. But yeah, let's just scroll back here. Sorry, I got to get to some memes. This, September 13th. That would have been a great time to trim, you know, to exit. You know, a lot of these were positive and now they're negative. So I think that, you know, that's a good time when you're seeing memes like this. You know, make sure that you consider that. Ethereum, oh my gosh. This is from August 22nd. And this guy's usually bearish, I feel like. August 22nd. Right here's the 23rd. Very nice top. Although we had some later highs, higher highs in other ones, like Doge went higher. Solana went higher. So good to think about that. But yeah, ETH, that was the top for ETH. This one, yeah, August 22nd. That was, you got to pay attention to the memes. The memes are so important. And what the memes are telling me now, while it might be painful, what the memes are telling me is that it's time to endure. So I hope this video was helpful for you guys. I do them every Saturday, and I will continue to do them into 2026 as long as I am continuing to stack, which I plan on doing for a while. But yeah, if you did enjoy this, if you did find it helpful, make sure you like the video, subscribe for these weekly videos every Saturday for Sat Stacker, Crypto Corner. Turn on the alert bell because I do kind of I do these at random times. And as always, though, those are just my thoughts. I hope you guys have a great weekend. Enjoy the weather if it's nice out because we might be getting ready for a long winter over down in Antarctica. But yeah, I'll see you guys later. Have a great weekend. All right, take care. Bye, guys.